Hello guys, welcome back to another lovely trading video. In this one we're going to be doing the day trading recap. Not a normal recap, we are on the paper account as you can see over here. That's why we got a $250,000 in the account. And the main reason for this was the first trade. So when I was looking at as market open, there wasn't that many trades looking like they would set up well. And when I did finally see one, it was TPST. However, I didn't like the setup of it, in the sense I would trade it on the normal account. So instead I opened up the paper account so I could test it out. And the reason so obviously we entered here. Actually we can draw it in real quick. We entered here, got stopped out around here. So we usually have that as blue, so we'll just leave it like that so it's easy to see. But you'll see over here, originally when it hit these this morning, it had large pushes. So obviously if we were trading this 39.80 level, probably have a stop around 40.10, and in this case you can see it went all the way up to 41. But you can see it happens both ways. It wasn't really bouncing off these key levels, but instead having massive candles throughout them. So to me that made sense. When it came down to the long level, it would most likely break a long way through. So I kind of just wanted to see how the stops would work and if they would be where we wanted them to actually exit. And that worked quite well, because we were able to see that it didn't work exactly how we wanted it to. So if we go over to all orders, we had our stop at 30.40. Where it actually got filled was 29.99. That was a 40-cent spread, and that's why it was a $318 loss instead of 200. And these are the trades I need to start thinking about if we are getting kind of into these trades, because we can't always control it. We don't always know if there's going to be a big candle like that, like one of these big ones, and that is a big spread. I mean, we can't be losing an extra 40 cents per share, especially on 300. It's too much. So looking to trade or set these up in a way where if we get these spiky candles, we don't get hit out or stopped out until it kind of goes back to normality. As you can see here, obviously we got stopped out on this move. In one candle we were, 8% extended, and we're going through a key level. We know no matter what, or 99.99% of the time, it's going to at least recover back to this deviation or 9 EMA, whatever's first. So that's one way I'm thinking kind of about either doing these stops by having them as stop limits. So it just means if it spikes in, it spikes out, we shouldn't actually get filled. Or just having the order automatically out, but then pausing it once we get into the trade, waiting to see what happens, because if it spikes we don't really want to get kicked out immediately. We want to wait for some recovery, and then we can kind of see what's happening, because I mean this did do exactly what we wanted to. We just had to kind of hold through the massive spike, because obviously it came back to our deviation, which if we go over here, I think that was our profit target, or our majority profit target, which was 31.70. Okay, actually way more. I think that was in case I wasn't there, but yeah, that would have been our key level is 33.30, and then a bit more at the VWAP, which would have been around 34.80 at the time. But yeah, we just need to find a way kind of like not to get kicked out on these crazy moves, because they will 99% of the time recover. Obviously we may have maybe 1 or 2 trades a year where it doesn't, and we just have to take that bigger loss, but throughout the year it would make more sense, because on that big loss that we take, probably be like a double loss than usual, maybe a maybe a $500 loss, where we usually risk 200 a trade. But if it can cut out all these unnecessary losses like this trade here, or even just turn it into a break even, just saving 2 trades, 3 trades a year, it would make sense to do it, even though it would probably end up saving probably like at least 25 to 30 trades a year, I would imagine. And the only other one we took, we just did this on the same account because it ended up getting a bit later in the day, was AEHL. Went long. Oh, we actually missed this. Would have traded that, but we did actually miss it, the 88, and that would have been quite a nice move. However, we went long on the lower deviation at the $3.80. Had a stop, I believe, at 3.40 with targets up here, so we're still in this trade and we're just waiting for it to move. to either a stop loss or a profit target. Actually, we'll move that stop loss to break even now. But yeah, that's mainly all we're looking for. Just to either come out at 430. Actually, we'll also push that down to say 415. But yeah, that's all we're looking for. We would stop out of that. But yeah, I mean, that's kind of the summary of the video. Is we're looking for a way to kind of just not get kicked out on these extreme moves, because they will most likely recover. But that's it for the trading recap. Hope you enjoyed. The videos over the next 2 days, I might not do that much trading as I'm on that second part of the internship with the audit, tax and corporate finance, so I might not do too much trading over the next 2 days, but we'll be back properly from Thursday onwards. So hope you enjoyed the video and hope to see you in the next one. Peace.